It is Tuesday, the day of the week you've all been waiting for, and here we are with Vetted VA Live. Every week we get together here. We have a topic we want to cover, but most importantly, we're here to answer your questions. We have a group of mortgage and real estate experts from the Vetted VA community who moderate your questions every day in the group. And tonight, we're going to be going through myths and misconceptions around the VA loan. So almost kind of a catch-all, free-for-all topic here. Some different things that we wanted to cover that get thrown out in the forums that as moderators, we're answering these questions and sort of debunking these myths. Some of them are myths that sellers have, that real estate agents have, but want to make sure that you guys have the correct information and know what you can and can't do your VA mortgage benefit. But again, most importantly, regardless of what topic we're covering every Tuesday, our primary purpose is answering your questions. So if you have a question, whether you're watching on YouTube, whether you're watching in the Facebook group, one of the other Facebook pages, throw your questions up in the chat. And as soon as we get a second, I will go to them. So tonight with me, we have David Osborn, also a Californian here, another loan officer in Granite Bay, California, near the Sacramento area. I've got Randy Teakell in Salina, Texas, also a loan officer. And then Gary one-upped us. He is in Los Angeles and Nashville, 2 locations. And he also is a mortgage loan originator and a realtor. So he's covering all coasts, all bases from that end. So, gentlemen, good to have you here tonight. Why don't we jump in with one that we get often, and this is sort of one of my pet peeves, both on FHA and VA loans. What's the deal with credit scores? So people will educate themselves through YouTube, through Google, and they'll come and tell us, well, I heard this, so why am I being told this is a problem? Or I got turned down because of credit. I heard there are no limits. David, you want to walk us through what the truth of VA mortgages and credit score requirements look like and how that shows up in the real world with your clients?
Yeah, no, definitely. So VA does not have an underlying credit score requirement. Where you're going to see the difference is with lenders, what we call overlays, which is really at the end of the day, what are they going to have an appetite for? So I would say a lot of lenders have a 620. That's almost like the cream of the crop, right? in most cases, but it definitely, credit score is going to be important when it comes to your interest rate, to be able to get the best deal possible. So it is still an important factor, but if you're starting to see or talking with a lender and they're like, oh, you need a 640 credit score, that is not, and they might even say that that's a VA requirement. That's not what the VA requires. That's their own lender, like their internal guidelines, that they are requiring that. So that's where it gets a little tricky. Not every lender is going to be created equal. So you want to make sure you're actually shopping around and doing your due diligence, reaching out to this community if you hear anything like that as well. So
I want to underline that with red letters there, that part about a lot of lenders who work for a direct lender. This is not a shot at direct lenders, but when they have an overlay, their company has an overlay that says we only do 640. It is incredibly common that you're told that VA requires that 640 instead of saying, hey, VA doesn't have a requirement, but we require you to have that 640. And I don't know where all of the big call center lenders come into play on this, but the Veterans United, the Navy Fed, the USAA of the world, those are the companies that are a little bit more likely to have those overlays. Above and beyond that, just can you get the loan? Randy, how does it impact you? Like, what would you like a borrower to know if they come to you and they say, hey, I got a 590 credit score, but I heard VA is okay and lenders are okay above 580. What would you like your potential buyers, borrowers to know about VA financing if you don't hit a 620 or 640, sort of that minimum threshold?
Kind of backing up a little bit, I have like 43 different VA lenders, and every one of them will do down to 620. I lose about half of them at 619. I lose another half of that at 599, and I have 5 that'll go down to 500. So consequently, the pricing pretty much follows that. The more lenders that are competing for your business, the better the pricing gets. So at 619, you drop off some. But is it doable? Absolutely, because I still have those 5 that'll go all the way down to 0. Is it going to be as pretty price wise? No. But my biggest thing is getting people in the game, and we can definitely do that from the standpoint of whatever. And then, I have 4 different advisory services that tell me rates are going to get better in the next year or two. So the rate might not be the biggest concern right this minute, more so just the getting in the game and getting in the ownership game is what I mean by that. So if we're looking at the next important factor with FICO score is the automated approvals that you get through the underwriting engines. I see that kind of follows, depending on obviously whose engine you're using, but that the lower your score is, the less likely to get an automated approval. And when you get away from an automated approval, then the automated approval is very flexible as far as the income limits and residual income, etc. But you lose that the lower the FICO goes. So for me, I try to get people, if they come to me with the 519, I'd like to at least take a look first to see what we can do to help get them up in a quick basis up to a usable FICO score that might even get a automated approval. Typically, I just closed one that was just thrilled to do. It was a manual underwrite, but they came to me with roughly like a 519, 521. They were a married couple, and they both and we did a few quick things for them to attack, and we got their score up to 599 for a mid score. So it was still not an automated approval, but it was one that I could take to my manual underwrite and get the deal done. So does that answer what you're asking?
Absolutely. And to kind of recap that, there's the number to be eligible for VA financing, and it doesn't really exist,
Right.
So we've got options all over the spectrum, but depending on where that credit comes in, we've got 2 things. Pricing is going to be impacted, and your ability to get an automated approval. Maybe talk, we've already done a show on manual underwriting, but walk through, what are you missing out on? If you are unable to get that automated approval, what does the underwriting process look for you, and what kind of limitations are you going to be having?
The biggest thing for me, if you're not able to get the automated approval goes strictly off of the residual income, and I've closed a loan at 84% DTI before, and with an automated approval. I would never have gotten that done on a manual approval, because the manual approvals that I know of, and obviously wholesale is a different world. There's different people with appetites, but the highest that I know that I can get done is 60% DTI. So even though my residual income is more than sufficient, the manual underwriting overlays where that they actually consider DTI in their formulas to be able to get approval. And then the other thing that goes away is the ability to have any sort of real recent smudges the last 12 months on your credit, where that needs to be fairly clean, which an automated approval can still give you something with some negative stuff if the overall package is what they want. But when you get away from that automated approval, you get to a little bit stricter, what I would say stricter underwriting around debt to income ratio, which isn't a factor for the automated engine, but it is a factor for the manual underwriting.
And I think the important part for folks watching right now is that automated underwriting system is truly a black box. They're changing the algorithm fairly regularly. We'll have a situation where we talk to someone, you have an automated approval, they come back 2 months later, there's been an update to the system, you run it, and we're not getting that approval anymore. So yes, you have all sorts of options with the credit score, where the range in terms of being eligible, but it's going to impact the rate you pay, sometimes significantly. Randy, you have some history here with a sub 600 score, but give someone an idea of the difference between a 680 FICO score veteran and a 550 credit score veteran. Not so much the actual note rate they'd be looking at today, because that changes day to day, but in a percentage rate difference, what do you see as a difference between those best scores and some of those lower scores?
So one of the things that people have to understand is the loan level price adjustments. And the loan level price adjustment is something that the servicers or the mortgage originators apply to your scenario, and it's going to vary lender by lender, but based on their appetite. If they don't have an appetite for a 550 score, and they can put a manual or an overlay, but they can also hit you with a big adjustment, that loan level price adjustment, and that will make it where that, just for instance, this last week I was locking loans, and I locked a 4 or a 599, and I locked it at 7 and an 8, whereas I was locking almost everything else in the mid 5s. So that's
a big difference. That's a really big difference. And it's
Yeah,
important for people to know that. You can probably get that loan, but it's not a little difference. It is a big difference when you get under 600 credit scores.
Yeah. And if I could have gotten them to 600 in their time frame, it would have gone to the in the low mid 6s. But that one point made all the difference. So.
No, it's a big difference. It's a big thing to be aware of. And that space, if you have a sub 620 credit score, it's the one area where I would say you almost have to check with a broker, because direct lenders are going to have way fewer options. How many did you say you have, Randy?
43.
3 different options. There's no direct lender on the planet. They might have 2, 3, 4 investors, but they are much less likely to have that breadth of options for you. So if you have a 620 score, a 590 score, we probably want to work on getting it as high as possible. But if you're moving now and you're going to do something, definitely talk to a broker. Nothing preventing you from talking to your bank, an online lender, but make sure you talk to a broker in that situation, because they just have the most options and ways to help. Gary, I didn't mean to shut you out of that conversation. But
no, you're good.
You up for the next one. Before we move on, did you have anything to add to that?
I do. I was just thinking, and I think one of the key things that Randy said is you got to check your motivation. Are you coming because you want to get in the game? And so if you're coming and you want to get in the game and you have to go manual, then you got to be ready to play a little bit more. And so I think that's sometimes, I don't know about you guys, but where I see frustration. We had a post even earlier today of someone saying, oh my gosh, why is the underwriter asking for all these things? And I said, well, you got to understand from their perspective, they're the eyes giving the green light on giving essentially a stranger hundreds of thousands of dollars. So it's someone that, they don't know all that well. They just know them through documentation, paper, and it's either thumbs up, thumbs down. And so they're going through everything, trying to figure out, exactly what it is that can and cannot be done. And so I would just encourage you that if you're going that route, or if things look a little bit questionable, A, don't lose hope, but B, be willing to play ball a little bit, because your loan officers, especially those of us at Vetted VA, we want you to win, and winning is getting the house and, getting your loan to get the house, but it may need to have some extra work. And we're definitely all, willing to put in the work, but we need you to work alongside with us. And we know that there's going to be frustration and emotions and things like that. And there are for us too, because we want to be able to serve you well. But that would be my only kind of addition with that, is just, if your goal is, let me get in the game, then sometimes it very much is a game, and we're going to need you to play along with us here so that we can get all the pieces in place for you.
So I think bottom line there is, when it comes to credit with VA, because there's no minimum credit score, you can have anything, but you can't have everything. So you can't have the low score and the super high, super good rate. You can't have the low score and qualify for the maximum amount. So what you can do and what you should do and how that all works is going to depend. But the higher your credit score, the more options you have and the better your terms are going to look. So before we completely put that one to bed, we actually have a really good question here. Gentlemen, is there a way to do a manual underwrite if I did have lates in the last 12 months? There were situations out of my control that caused me to miss these payments. Is there anything that we can do in terms of letters of explanation, documentation of, unforeseen circumstances where you could get a manual underwrite approved if they have had lates in the last 12 months? Can you guys
Randy might have a little bit better experience. I mean, I've had clients where they had extenuating circumstances, right? But at the same time, most lenders, at least in my experience, it's going to be really difficult if there's any type of trend in the last 12 months. So is that something you want to expand upon, Randy? You're muted, bud.
There you go. Got it. Okay. So the big thing, and I'm actually working on a couple right now that are manual underwrites, is most lenders are going to absolutely want the last 12 months to be clean. You'll get a couple that'll make a couple of exceptions if it's just like a minor thing, but you can't go totally in the ditch in the last 12 months and expect for the underwriters to endorse you. In fact, even in the bankruptcy 26.7 or the pamphlet that I was reading today about a particular topic having to do with how soon since bankruptcy you can do, they basically said for the first 12 months, you after a bankruptcy, you absolutely can't make a determination how well these people are reestablishing themselves. So it's not an answer that I would love to give. I'd love to say there's a way around it, but if there's a loss of life or limb, then basically that might be extenuating circumstances, but divorce doesn't count. There's a lot of things that you would think are definitely hardships, but they absolutely are not a reason that an underwriter is going to approve you. I'm sorry. So.
Yeah, it really is written as a fairly hard and fast guideline. If you had some type of documentation and something incredibly unforeseen, you might get an underwriter to consider it, but I would think they would probably want to send it to VA and get prior approval on it and get their sign off on it, which that can be done sometimes. So we may just end up talking about credit and FICO scores all night, guys, because we got a couple of questions popping up in here, and they're good ones. Wanted to get to this one first. How much is the actual mortgage credit score considered? When I add my 3 scores together on my FICO, I'm around 600 plus, but the mortgage score is way less. David, you want to talk about, I mean, we get this all the time. There's people, right, whether it's Credit Karma, Experian, my FICO, annual credit report. How does that compare to our scores?
Yeah. And it's all over the place. I help clients with credit repair all the time. And there was a gentleman, like a credit repair seminar that I was at, and he said that there was over 60 different credit scoring algorithms. And I believe it because we like to make things complicated, right? I do want to point out, because there have been clients that have, I feel like the mortgage credit score, and we have like, the 35% payment history and things like that. But I really feel like the mortgage credit scoring algorithm gears longer credit history, whereas like Credit Karma, you could have a lot higher credit score for that when you only have like a year or two of on-time payments and just not much credit established. So it's going to be on an individual basis of how much that variance is going to be. So that's where I would say you want to, again, lean into our tools that we have, our Go Bag, right? Because that, correct me if I'm wrong, guys, but that FinLocker Go Bag is geared towards a mortgage credit score, right? Yeah. So, and that's free for you guys. So if you're not familiar with the Go Bag, we'll make sure that we put that link on, because that's huge. And I believe that it actually allows you to kind of play with it to see. It's going to not be as specific as we can get with our what if simulators on the mortgage side, but it will give you a general synopsis of, hey, if you pay down your credit by $1,000, your credit score is going to go up by X amount. So it's an amazing tool. It's free to you guys for being part of the Vetted VA community. So I would highly recommend that if you don't do that, but don't pay too much. And how I explain Credit Karma, or even if you go to the credit bureaus directly and do like your free annual credit report, that is just a good baseline. Definitely do that annually, because let's face it, we're in a world where fraud is happening more and more, especially when it comes to like our electronic information. So you want to definitely take a look at that, but that's not going to be a good indication of where your mortgage credit score is at all.
Tell me if you guys agree with this. In my experience, what I see, the higher the credit score is, the more accurate free credit scoring models are. So if I have someone that's a 750 score, it's going to be closer. Whatever I pull, if someone tells me they have a 750, what I pull is going to be much closer to that than someone with a 640. I just generally, when someone says I'm at 600 plus, I'm worried that when I see that, it's going to be a 560 or a 580, those lower scores. So I see you guys shaking your heads. I just wanted to make sure it wasn't me and wasn't me being crazy. And actually, the first part of that question was, how much is the actual mortgage credit score considered? Well, there's two pieces there. It's considered a lot in terms of the interest rate. Randy gave us an example where same rate sheet, same day, you have a 1.5% difference from that 520 credit score to a 680 or a 700 credit score. So big on that. In terms of getting you approved, it also plays a big role in whether you're going to get that automated approval or not. Once we go down to a manual underwrite, it's already impacted in your pricing, but it doesn't really impact whether you're going to get approved. You either meet the manual underwriting guidelines or not, whether it's a 540 or a 580. Would you guys agree with that?
Yeah, but again, you're going to be dealing with less lenders because there's
Less
not
options.
as many lenders. Yeah, exactly. So that's why your credit score is still an important factor. Is it the end all be all? Definitely not. But it's very important.
All right. Now we have the most difficult question we're going to face tonight, gentlemen, because there is no right answer. So Sybil would like to know, do you suggest a floating rate or a float down option? So I am not asking you guys to dust off your crystal ball and come out and tell us what's going to happen with interest rates, but tell us, let's kind of go around the horn on this because I like this. Let's go through, if you had a client asking you this question today, how are you advising? What are you telling them? So with that, you want to kick us off, Gary?
Sure. You know, there's a saying in the industry, if you like it, then lock it, right? And so if we're going to go through a couple of scenarios of what's available right now, then if you're like, well, you know, most people say, well, you know, I would really like it to be more like a 2.5. Like, okay, well, that ship has sailed. I wish it hasn't, but it's gone. But, you know, where are we at today? Do you like today's rate more or less than yesterday's rate? And how much of a risk are you willing to take? And so that's really what it comes down to is, you know, are you a risk taker? Are you a gambler? In that sense of just saying, hey, like, you know, I know what we can do right now in this minute. If I click this button for you that says we're going to lock, or, you know, we can look at floating it a little bit. And again, even actually all four of us were talking a little bit about this before we even started today of the economy in general. And so it's like, well, what do you think is going to happen when we get some new reports coming out? And so we're like, well, you know, hopes are this and expectations are this, but nobody really knows until it happens. Like, that's the bottom line. The only other thing that I'd recommend thinking about with that is, I know in Vetted VA, a lot of times we give the recommendation of shopping your lenders, and that is important. You want to make sure that you're shopping your lenders, but also make sure that you're that you're comparing apples to apples. Because if there's been a huge movement in the market, then it's possible that you locked with someone at the best rate that was available at that time, but maybe now there's something that's a little bit better, and it's not anything that the other mortgage professional did to get you a higher rate. It just happened to be the market in that moment. So have the conversation with them. Talk a little bit about them. If you built that trust, if you feel like they have your best interest at heart, then, you know, give them another opportunity to say, hey, what can you do, if anything, about this for me? Because a lot of times there's assumptions that are made that just unfortunately, you know, aren't true. So I would definitely recommend circling back with the person that you trust and having those open, honest conversations.
I think, you know, one of the most important things you said there, what I like to ask people is, so imagine you get off the plane in Vegas, you get in the taxi and you get to the casino, the hotel, and you pull in. Are you the person that cannot wait to get to the blackjack table? Or are you the person that can't wait to get to the buffet or shopping or whatever your thing is? because if you're not that person that wants to get to the blackjack table, you're probably not comfortable with gambling. It can be stressful. It's important to note that when rates come down, they generally come down slowly. When they go up quickly. So you'll lose a lot faster than you gain. You know, I'm probably speaking for you guys, so correct me if you don't feel the same. But if you ask me where rates are going to be 6 months from today, I'm going to tell you with a pretty high degree of certainty they're going to be lower. But if you're under contract today and you're going to close in 3 weeks, I have no idea where they're going to be. They could easily be higher. So within the narrower confines of a 30-day escrow, a 45-day escrow, we have to consider that much more closely. David, Randy, you guys have anything to add in how you have that conversation with your borrowers and deciding whether to lock or float?
David, do you want to go first?
Sure. So I like to explain it to my clients as insurance, right? You're going to know what your worst case scenario is. And I try to make sure I'm giving my clients options that they know, hey, this lender might be a little bit better in price today, but if we go to this one, they're slightly worse, but they actually have a float down option. Now, that doesn't mean that you're going to get market rate because they actually have expenses on the back end when they lock and secure a rate for the secondary market is what we refer to it as. So not to get too granular, but so those are the type of conversations you need to have with your loan officer and make sure that they are being transparent about that, because the last thing you want is, especially if you're coming in it from the standpoint of like, you're set like, oh, I want to have the best of both worlds type mentality. Yeah, you could potentially have that, but it means that you are going to be paying for it some way at the end of the day. So Randy?
we've done a spectacular job. We are 26 minutes in, and we've got through the first question on our list today. So we might have to go like the rocket round here and just fire through as quick as possible. Everyone gets 1 minute to give their thoughts. But Gary, I wanted to circle back and give you the first opportunity on this one. We have all had the situation where my neighbor, my dad, my sister-in-law, someone said, don't do a VA loan. FHA and conventional are better for you. It may have been a realtor that you're working with or a lender that you talk to. Back to that theme of myths and misconceptions around VA financing. What would you say to someone who's been told that?
Anyone that says that to another person that's professionally licensed just hasn't been well educated. It's simply that's what it is. Is the VA loan is an incredible product. It has so many advantages to it when you look at it in comparison to other loan options that are available. And I could spend the next hour just going through those, and as I know that all of you can as well. There's safety nets that are in there. There's opportunities to be able to have increase in value on appraisal. There's so many different things that are available, and there's just a lot of misinformation out there. And so, if you're ever told that as a consumer, then I would just strictly go back and say, well, why do you say that? Why do you believe that? Oh, well, we'll never get your offer accepted. Okay, are you educating the listing agent? Because I've read, and you can go to the Vetted VA website and download our white paper, and it has all the source material there. I've read that VA loans actually have a higher closing rates than conventional loans. So I'm just curious, like, does the seller not want to close, or like what is it that is preventing them from accepting our offer? Like, help me understand that better. So education is key on this point. And so I always go back and again, even I know Randy and David, myself, Josh, like any of our other communities members that are licensed professionals, we will and have make calls on your behalf to some of these other professionals, not to steal business. Like, we're here for you. And so we'll never say, oh, well, just work with us instead. There's been several times that I've personally called to other professionals and said, hey, we have this resource community that's geared towards education. And so-and-so asked me to give you a call and run this scenario through to you, and maybe give you some pointers on what you might want to present in this situation. So would you have some time and some openness to listen a little bit? Because this is how I would present it if I was in your situation. And more often than not, they'll listen, and then they'll come back and say, thank you so much, because we got our deal through. So we're here to educate. We're here to help.
At the end of the day, there's really no comparison between the VA financing and anything else. Like we're going through tonight, lots of myths and misconceptions. So generally, the loan officer, the brother-in-law, the realtor is just not educated on it. Gary, something that you said is joking with them about it. Why do you think that? Does the seller not want to close? You want to keep it lighthearted. You don't want to get adversarial and have someone dig in their heels, but ask them why they think that. Ask them how many VA transactions they've been involved in as a realtor, as a lender, because generally they're not familiar with the product. They don't know it. They don't understand it, because all of us can sit here and tell you adamantly, it is far and away the most flexible loan program out there. If I have a difficult file, I would much rather it be a VA loan than any other type of loan, whether it's a difficult appraisal, difficult income. We have more flexibilities with that program than anything else. So it leads to a more successful outcome for sellers, for realtors getting their paycheck and having happy customers, whether they're representing the seller or representing you, the buyer, because you're getting what you want in that situation. So with that, another big misconception that we have is that the VA has to underwrite the loan. It's going to take longer. It's going to be more difficult. So Randy, I see you shaking your head. Why don't you explain how the delegation of the underwriting authority works and how you come into play and the underwriter and how that all shakes out?
Well, basically, the only product that I know that meets what you just said is the USDA, where that they actually have to send the file off to USDA to get underwritten. Obviously, back in originally when I did a lot of those, they were actually full file folders that sent, but it doesn't work that way with the VA. They've got guidelines, and they educate the folks in positions of authority at the particular lender. And that's what they give them is underwriting authority, where that they are able to use the guidelines, and they're highly encouraged to find a way to make deals work. It doesn't go anywhere else. It goes straight to the underwriter. Obviously, the processor has to put her hands on it, et cetera. But it's not anything like a whole nother set of people that look at it. It's the same people.
Yeah, it's important to know that that's a complete and total myth. It's going to go to your broker. It's going to go to the lender for underwriting. Doesn't go to the VA. We do have some unique situations. If you have two veterans borrowing together, there are a handful of situations where it does actually go to the VA for prior approval, but that is absolutely the exception rather than the rule, like the exception of like less than 1 out of 100 type of exception. So not anything to worry about. For those of you who may have been interested, Gary mentioned the white paper. I posted a link over here, Debunking VA Myths. It's a long document that picks 7 or 8 of the biggest myths around VA financing and gives you all of the data you need behind you to either explain to a realtor or a seller why the program is the most flexible and the best for you. So with that, David, why don't we talk about this one? Hear this all the time. Well, I don't want a VA loan. VA loans are expensive. It's going to cost me more. You want to walk through the differences between VA financing, conventional loans, FHA, other options that a buyer may be considering?
Yeah, no, definitely. As far as the VA loan product being more expensive, that's not necessarily the case. And the biggest thing I think that people get a little bit upset about because of not being educated is the VA funding fee. But on the same side, if you even have to pay that in the first place, because there's a lot of different ways to be exempt from that VA funding fee, you're not having private mortgage insurance. So that's a huge cost. I know there's been a lot of news and social media about how much FHA lowered, right? And I think it was like a $300,000 loan. It only lowered $800 a year, right? It's like, well, with a VA loan, you're probably on that same 300,000. You're probably saving still $1,200, if not more, right? So, and that's year over year. So, and then there's also protections depending upon how the loan, or I should say lender, how they basically set up if they do like a 1% origination fee, which is not too common. Correct me if I'm wrong, guys, but I don't really see that when I'm in like a competing situation. That used to be more, I think, more of a common practice like 5-10 years ago. But if that was the case, the VA says, oh, if there's a 1% origination fee, there's fees that you cannot pay as a veteran, and they have to be seller or lender paid. So again, you got to make sure that you're comparing lenders, right? Shopping around, making sure that you're dealing with someone that actually understands how the VA home loan works, because in a majority of cases, it's not going to be more expensive. So, and on top of that, I would say, since you said comparing it to an FHA and VA, right? Or FHA and conventional is getting more expensive, even for higher credit scores. We're not seeing those type of loan level price adjusters on a VA. Knock on wood. Like, seriously, I got to figure out. I think I got wood right here. Like that's not going to happen for at least Jenny May, who's like the financial backer, right, for VA. So again, you're going to be way better off, not just because of the private mortgage insurance that you're saving on a monthly basis, but in a lot of cases, you can be exempt from that VA funding fee. And I feel like that's the biggest ticket that people, veterans that I've helped, are like, oh man, I wish I didn't have to pay that. But I'm like, look, as a conventional loan, you're still thousands and thousands of dollars ahead of the game, So.
And really, if you prepare a loan estimate for a borrower, let's say they're a veteran, and obviously they could qualify for conventional, they could get an FHA. If you compare those side by side, really the only closing costs that are going to vary is the upfront mortgage insurance premium on the FHA is different than the VA funding fee and won't exist on a conventional loan unless you're doing some sort of split mortgage insurance premium, which is pretty rare. But everything else, whether a company charges a processing fee or not, that's not going to change. Whether they charge an underwriting fee or not, that's not going to change. So if you're looking at one lender, all three of those options should be priced the same. And if you're comparing different lenders, any of those programs, it's not program specific, it's lender specific, because any one lender that offers all three of them is going to have the same closing costs, except for that VA funding fee and upfront mortgage insurance fee, which are dictated by the FHA or by the VA and are going to be the same for everyone. So definitely a big myth there. We have a super easy one here, and we hear this fairly regularly. Don't I have to be careful when I choose to use my VA benefit because I only get to use it once? Big misconception, right? Randy, why don't you talk? There is potentially, if you're not funding fee exempt, there is a potential downside to using it and coming back. Why don't you walk us through what that looks like, a subsequent use versus your first time use? You're always going to get the best deal the first time, but if you're not exempt from that funding fee, how is it different on a subsequent use?
Yep. So the funding fee obviously goes, and I don't have this memorized, but 3.3 on a first time or the subsequent use versus 2.15, I think is the number. So it does go up the second time you use it. But the biggest thing that I heard you say that people, even today, I've spoken to a couple of people that didn't realize that you can even use it a second time. And that is one of the big myths that people hear. Like, I've always asked if you were a veteran on my 1003 or my application taking, and obviously in 2019 or whenever they added it to the 3.4 that it had to be part of the disclosure questions. But I've always asked that, and I can't tell you how many times people have said, yes, I'm a veteran, but I've already used it, so I'm going to do something different. And why would you do that? Obviously, unless you just don't understand that you can use it again. So I've already used that. I've already paid it off. I can't use it again. That's a big thing that's out there with a lot of people. And then secondly, people don't understand that you can have two loans at once. That's where bonus entitlement comes into play. Since 2019 with the Blue Water Navy Act, you have no limit on the loan amount you can borrow if you have no entitlement tied up, but you have more and more entitlement as the conforming loan limits go up that is available to you in another loan. I did a questionnaire with the guy today. He was asking, he had a $240,000 purchase that he made 8 years ago, and he was saying, well, I have to sell that property before I can buy another one, and it's going to cause me some issues. And I said, no, you don't have to sell that at all if you don't want to. It's up to you. It's an option. And he said, well, it'd be better for me if I didn't. But I want a loan that's a house that's a little bit nicer than the 240. I said, well, in your particular case, you've got 480,000 roughly that you can go without a down payment on that product using bonus entitlement. So there's a lot of ways that people just don't understand the number of uses of the VA loan. And other than the funding fee, there's really not a lot of reason not to use it again. And the one thing I want to make sure that everybody understands is that apples to apples, a conventional loan and a government loan, the government loan should be priced better, because the raw pricing, unless you're adding additional margin to the government loan, the raw pricing for an FHA or USDA or VA loan is significantly better. And I'm talking about, like, right now, if your rate's 5.5% for a VA loan, your corresponding conventional loan is probably 6.25. So there's that kind of difference that people just don't understand. All things being equal, the VA pricing is better. So that's what we've talked about.
And that we don't have that on the list, but I love that you brought that up. It is a big misconception. Government loans, VA or FHA, are more expensive than conventional. And I think there was some truth to that before the meltdown in 2008, when everyone kind of realized, hey, Fannie and Freddie loans have an implied government guarantee, and the government did step in and guarantee and make sure that none of those investors lost money. But FHA and VA actually have a true government guarantee. So investors said, I would rather put my money in those pools, regardless of whether 3.5% down, 0 down, lower credit scores on average. I have a full guarantee. What do I care? If someone defaults and I lose money, the government's going to write me the check. And then on top of that, Vetted VA has done a great job of running the numbers. There are still a large cohort of direct lenders that use government loans to subsidize their profit margins on conventional loans. It's why, not all lenders, I'm not going to paint everyone with broad strokes, but we look and there is a wide spread. I wish Christopher here was with the data. We're seeing, it's like 1.5% from best to worst price lender in the US. And I'm not talking a little hole in the wall lender with a really high rate. A big national lender doing lots of loans at really high rates relative to what is out there. So government loans, very, very well priced relative to other options. Definitely account for the mortgage insurance and the different ways it's done with the VA funding fee and the FHA upfront mortgage insurance premium, but they're good. So this next one here, we've done an entire show on this, but there's lots of questions, misconceptions, myths, misunderstandings around the VA appraisal, often called the VA inspection. So Gary, why don't you walk us through, is there such thing as a VA inspection, and why do people have that misconception, and how do you resolve those myths when you're dealing with buyers and borrowers?
Yeah, absolutely. That's such a common question and a misunderstanding. So when you make an offer to purchase a home, your job as the buyer is to do due diligence, right? You want to be able to find out as much information about the home as you can. And that typically comes from three, I got the blur on here, it's blurring my fingers. Ooh, sorry. That comes from three sources. One would be any seller disclosures, and that could include also the listing agent's disclosures. So anything that they know about the property, they should disclose to you. The second would be hiring inspectors to work on your behalf of your choosing. So you hire a home inspector, and they may suggest having some other sub inspectors come out, or specialists in different areas. And the third is the appraiser. Now, the appraiser is the one that's the most misunderstood, right? Because people say, "Oh, I had my VA, inspection come, and it was done by the appraiser." It's like, no, the appraiser is looking at the property, and they're physically got eyes on it, but they're looking for just really the minimum requirements for that home, and they're looking to assign the value to the home. Like, this is their purpose. Is they are looking to make sure that that it meets the minimum standards for health and safety for you to be able to purchase this home, and to assign an opinion of value to that home, so that the lender feels comfortable giving you the money. but they are not going through all the systems of the home the same way that a home inspector would do. And so if you've ever been present when an appraiser comes, you're talking, depending on the home size, it could be anywhere. I've had some that have come through in 15 minutes and they're done. And, at the absolute maximum, maybe 45 minutes. I've had home inspections that have gone 7 hours. That's my record is a 7-hour home inspection. It happened to be for a house that I was buying. So maybe it doesn't count. I said, you get back in the attic. But it's one of those things where the home inspection is looking at all the systems. They're looking at all the electrical outlets. They're testing to make sure that all the plumbing works. They're using, I always recommend that you get a home inspector that has infrared technology, that has a drone to fly through over the roof. If you're, in an area that may have some settling with soil, then you might want to have someone come through and look at the foundation. That's a specialist. So there's all these things that can take place for home inspections that the appraiser is not going to do. And I think one of the follow-up things that I might add to this, and that I see a lot at Vetted VA, and maybe you guys can chime in too, is that especially for those of you that are watching that are first-time home buyers, there's a lot of unexpected expenses or repairs that come in after you purchase the home. And a lot of times there's a frustration because you think about all the money and time and all the energy that you just focused to get into this home. And then you're there, 3 weeks, and maybe, you bought your home near Randy and it's getting really hot in the summer of, in Texas, and your air conditioner won't turn on. You're like, my gosh, shouldn't the appraiser have caught that? Or shouldn't the home inspector have caught that? And, where can I go to be satisfied and have this repair done? And the appraiser, as well as the inspector, their reports are only good for the time that they're at the home. They're saying, when I was here, this is the condition of the home when I was here. So there's no guarantee that it's going to continue in that same condition. And so maybe you can, and I know that we've had shows on home warranties, maybe you can, purchase a home warranty, or maybe you can look at different riders in your homeowner's insurance, but just be aware that that's not the job of the home inspector or the appraiser. Their jobs are to say, what's the condition of the property today? And for the appraiser, what's the value of the home today? And does it meet those minimum property requirements to get you into that house? Did I answer it all right?
Yeah, no, absolutely. Let's follow up, because another one, people think VA appraisal, it's going to take longer. It's assigned by the VA. They're there to protect the VA, so they're going to come in with a lower value. David, any feedback on some people having those thoughts around the VA appraisal process and why it couldn't be further from the truth?
Yeah. I mean, there's definitely some VA appraisers. Most of them have retired, at least in my market. Thank you, Lord. but they were actually trying to do what was best, for the veteran, trying to make appraisals come in below. But at the end of the day, and I believe we have a link that we can share with it. There's going to be timelines. So like, I'm in California, so they have 7 days, but they're coming back a lot quicker. I mean, because there's less inventory, right? So less deals are being done. So I'm actually seeing like VA appraisals over the last, I would say, year coming quicker than a conventional in a lot of cases. So there's that common misconception. But the one thing I do want to touch on is, they think of like the VA appraiser is going to come in low. Well, VA is the only option that has Tidewater. And you're like, what is Tidewater, David? Well, that's actually where the VA appraiser has to reach out. And in this case, it would be to the real estate agents, right? Either the listing agent or the buyer's agent, to try to get more comparables to help and try to ensure that they can actually come in at value. And then if that doesn't work, let's say they submit the VA appraisal and it came in lower, your seller's not happy. It's still not an end all be all. There's a rebuttal process that we can actually do. So as far as appraisals, like there's that common misconception of like, oh, they always come in low, or, oh, they pick the house apart. And it's like the VA actually has the most, I was going to say lucrative. I can't think of the word. flexible. I'll just say flexible, right?
Well, here's the thing, David, that I think is amazing that people just don't really get. This was actually brilliant, and every type of loan program should implement a version of Tidewater.
Right.
Once someone puts their name to something and says, this is my opinion, it becomes a fact and they own it and they're married to it and they don't want to come off of it. So the difference here on an FHA loan or a conventional loan, the appraiser sends over their report, says, there's my name, there's my facts, that's how much that home is worth. And you have to go back to them and say, hey, Mr. Appraiser, who this is your life's work, you're wrong, you're dumb, you don't know what you're talking about. In this situation, the appraiser is required to reach out to all parties and say, hey, I'm not seeing the value you guys are seeing. Can you share any and all information that might help me see what you're seeing? And it becomes a collaborative process. They don't lose face if they bring that value in. And I've had many of them come in at value after them invoking title. Not all of them, but many of them, right? And I can't think of any other situation where you're giving them an opportunity to, hey, I'd like to gather some more information versus being told you're dumb, you're wrong, all that. And we still have the reconsideration of value process after that. But the Tidewater is brilliant. And I think it would be smart to have it everywhere else. I don't know how it would work with FHA and conventional because there's not really an authority like the VA there handling that. But it is a beautiful, beautiful process from that perspective. Randy, I've got
in that line, and this kind of goes through the whole conversation, but I think that one of the major misconceptions, since that's our theme for tonight, is that the VA and the VA loan is preventing me from home ownership, where nothing could be further from the truth. The VA and the VA home loan is really the only loan where you have a team of people that are continually there saying, we want to back you up to get into this home. And I think that that's really, the number one misconception in all of this is that that's not an obstacle. These are men and women that are working really hard alongside these other professionals, your real estate agent, your loan officer, to say, hey, we want you to have the home. So how can we make that happen? And no other program has that. And with my real estate hat on, I've filed rebuttals for conventional loans and FHA loans, and most likely they've gone into the trash. But anytime where it's been something that I needed to do for a Tidewater, I know it's looked at and there's adjustments that are made. And it's because there isn't, like you said, there's not that ego. It's saying, well, this is part of the process. But that process doesn't exist anywhere else. Or let's call the regional loan center and see what we can get in support from some of the folks there. Okay, they're going to help educate on this fact or this fact. Or let's go, to the VA handbook. Again, there's all these resources that are there to say, how can we get you this loan so you can get your home, that just simply don't exist in any other program. And I think that's what's key, is there's a team of people that want you in that house.
To kind of underline what you're saying, the regional loan center is kind of, the buck stops there. You're going to get a final answer, and they really want to see things in the veteran's favor. They really want to see things in your favor. That doesn't mean they're going to do anything, just bend over backwards. Yes, veteran wants it. I mean, just like you don't give your kid a candy bar just because they want it. They want the best for you. So within the constraints of the guidelines and the system, they're going to do everything they can to see it your way. So if you have a team that you're working with, lender, realtor, and they understand the system and the process, you should be able to get a resolution with a positive outcome. Randy, I want to throw this one your way, and I really like this question because it comes up a lot, and there's a lot of misconceptions and misunderstandings around vetted VA itself. So what is the deal with vetted VA? Are you guys a mortgage company? Are you a real estate brokerage? Maybe walk us through what vetted VA is, how all of us got here, and what our role and purpose is.
Yeah. So what vetted VA for me, I was one of the original guys that was asked to do this gig. And originally it started as the brainchild for, Chris had referrals that Chris is really good on generating relationships, and folks were calling him from all over the nation to ask if he could help them. And obviously he wasn't licensed in all 50 states. And so he had to refer stuff out. And so what happened was he was really disappointed with some of the options that he had to refer out. And so he started a little group of people that he could trust to refer stuff to. And that was the very, very start of it. And then his vision grew for the education piece, and then no solicitation whatsoever. And so we grew from, focusing on being a referral group to being folks that were helping to educate. And I think we're at like 63,000 people, something like that, in the active group right now. But over time, we've just held that focus and that vision to have those two main rules: no solicitation, and that was a big problem for us a couple of times along the way, where that people were part of the group that just, they couldn't help themselves. It's just like, most of us have been in a group where an online group that we ask a question and we got 15, 18 people that raised their hand and said, "I'll help you." Then wait, no, I want an answer. I don't want you necessarily me to be obligated to use you if you answer me. And so this group was from the beginning devoid of that aspect, that emotional part of it. And I know that I answer, I'm only licensed in Texas, but I answer questions all the time for the other, states and territories, et cetera, et cetera. Same for Gary, same for David. And that's really what we're all about, is helping to educate folks, and making sure that they've got a comfortable place that they can come without being assaulted by solicitation. And what I love about referring people to it is that, and I refer all my people there, is that they may not have, without that group, they may not have thought of questions that they wanted to ask you. Because obviously I'm a resource that they can ask me whatever they want to ask me. But if I refer them to the vetted VA group and they join it, somebody may ask a question that they're like, "Oh, wait, I should have asked Randy that." And so it's a win-win situation for everybody involved, that we just don't have any other place. And I'm a part of a couple of other groups that are similar and focus on veterans, but I don't have any place that's got the same focus on serving the veterans without your handout. So that's me.
Yeah. And the part that I would add to that is there is a large education component. I mean, I don't think the people that are wanting to join don't have a high degree of education. I could say for myself, for us in Southern California, most of our military installations, other than the San Diego area, have been shut down. So we don't have a lot of active duty in my Orange County, LA County type area. And that stuff was a little bit of a blind spot. I can go to the handbook, I can look that stuff up, but having gone through the education, being a part of a squad, seeing our private group of the moderators behind, where people, like, the reality is none of the four of us can know everything that can come up in a VA loan, not even close.
Right.
And it blows my mind that nearly every scenario that can come up that's weird, crazy, off the wall, surely one in a million, someone in this group has had it and solved it before and can give you the shortcut to it. So there to get you answers, the right answers, because of the education and the group, and being able to say, "Hey, I'm not sure, but I know someone here does. Let's get the right answer and get you that." And we talk on this show all the time. Who you work with is important. You can get a really bad VA loan. You can have a realtor who's never had experience with the program, doesn't know how it works, and not represent you well because of that. So a vetted realtor, a vetted mortgage loan officer is not the only person that can fill that role. But if you come here, you got your questions answered, and you said, "Hey, I don't have someone that I'm confident can do that for me," there's a map. You can find someone in your state, hopefully near you, that can help you with that if and when you decide that's the direction that you want to go.
And one of the things that is in a class that I teach is the average loan officer, when you do all the math out, et cetera, is closing somewhere between 1 and 3 VA loans a year. And so you cannot know what you need to know if you're only closing that number. And just the folks that are moderating are getting so many more questions and enlarging their boundaries of knowledge, et cetera. It's a kind of an ongoing self-fulfilling prophecy, if you will, that we're here to help, and we're being helped by each other, and we're all being lifted up.
And the crazy thing is, being a part of the group, I do more VA loans, but it's not necessarily from the group. I don't do a lot of VA loans from the group, but I do more VA loans because my expertise went from nice and big to real big, because the power of the group, the wisdom of the crowd. We really, I can't stress it enough. There are people that know things, and I'm like, how would you come across that crazy scenario and actually know that? But I get to know that because we have the group here that we can all share together. So we tried to keep these to an hour. We're running up on an hour here. We had a couple of quick ones wanted to run through here. We talked about the VA, the misconception that VA loans are more expensive. There's also a misconception out there, largely among realtors or possibly sellers, that they have to pay all of the veterans' closing costs. Gary, is there, as a seller, is accepting a VA offer any different than any other type of loan?
Absolutely not. Yeah, it's not. There's opportunities for negotiation in every offer, and so there is an opportunity for you as a buyer to request for some closing costs to be covered, but that's true of any loan, or it could even be a cash transaction. You could still ask for those closing costs to possibly be covered. One thing that I'll note on that, because I see this a lot, and it's just kind of bad information. If you ever are told, oh, we'll just ask for it and it will be covered, that's that's just not true. So a lot of times it's you can ask and then someone can say no or meet you halfway, or can say yes, like you don't know. But that's a question that we get a lot of times of, oh, just have the seller put seller concessions in, you'll be good. That's still the listing agent and the buyer's agent sitting down and talking with each other, and then going to the seller and saying, hey, Mr. and Miss Seller, how do you feel about giving up some of your proceeds? So that's still the conversation that's happening. So I just want to bring that up to keep that in mind, that it's not a slam dunk every time. Yes, it can happen and it does help, but it's not a requirement. And it is something that, like most things in life, are up for negotiation.
Something that we did not get on our list, and it blows my mind that I didn't get it on there, because this is probably the craziest one that is the most common that I see in the Vetted VA forums there on Facebook in the group. Can you, on a purchase, finance your closing costs? So we know it's zero down. Can I finance my closing costs? David, you want to take that one?
Yeah. I mean, technically, without going into like examples, it would be no, but you can structure it that way. That's the key. So
you can structure it. You can structure it so you don't have to pay them. They cannot be financed and added into your loan, where we have people that will show up adamantly. I've done 9 VA loans in my life. I've financed them every time. And yet we've got a bunch of vetted experts that have gone through this thick of education. So explain, when those people, they're not wrong. They didn't put any money down. They didn't pay any closing costs. How did they do that?
So what probably happened, and I don't have the best memory either. so is that they were talking with their realtor, figuring out how to negotiate. And let's say, for simple math, it was a $500,000 purchase price, and they had $10,000 worth of closing costs. They probably raised their offer to $510,000 and requested like a $10,000 seller credit. So that's the way you're able to structure it. Unfortunately, like with a refinance, we can finance that as long as you have enough equity in the home. Well, with a VA or IRRRL, interest rate reduction refinance loan, there we go. Tongue twister. You can actually finance all that. So the short answer is no, but the correct answer, a longer winded one, would be you just have to structure it properly. And again, hopefully your real estate agent that you're working with can make sure that the comps are going to support it too, because then if we have a low appraisal potential, then you might have to have some skin in the game, that could be either by you coming in with some cash to close, or there's ways that a lender, we can structure it with a slightly higher interest rate to be able to get a credit too. But there are ways to be able to really slice and dice it to make it so you have that VA no, is what everybody that I talked to that had that experience, they're like, no, I swore I did it. It was a VA no. And I'm like, I know what you're saying. You're just forgetting that conversation of how it was structured. So definitely.
So with that, we're at an hour 4. So I think we've covered enough myths and misconceptions for tonight, but I always like to go around the horn, give everyone one last opportunity to share anything, whether it's related to myths and misconceptions, things you've learned in the group. What do you want buyers, borrowers to know about the VA program? Gary, you want to kick us off with that?
We have another hour, you said? No.
We're gonna let you do a monologue for the next hour.
On.
We're gonna sit and watch.
Stay on for anyone. Just circling back to 2 quick points. One would be that the VA loan program has a team of people that really are here to support veterans to get into homes. So that's the first thing. The second thing is I just want to circle back on what David said just a moment ago. Closing costs to cover, or excuse me, increasing your purchase price to cover your closing cost is icing on the cake, but be cautious, because if you're anticipating that that's the way that you're going to get into a home, it may not pan out that way, because in the event that you can't get your value to that spot, you don't want to find yourself in the 11th hour not being able to close because you don't have the resources to do so. So just make sure that you plan appropriately and celebrate if that's a win for you. But if for some reason it doesn't work out, I would hate for you to not be able to get the home with an expectation that couldn't be met.
Randy, what are your last words of wisdom?
Just don't be afraid to jump off and do this thing. And I think the main thing I would tell you is it's a wonderful product. It's the best that there is by far, but find people that are knowledgeable and passionate to align yourself with. It's like anything else in life. The people on your team are going to make a huge difference, and you need to make sure that those people are passionate about it. Don't go get a realtor that because they're your brother's friend or whatever. If they're not doing VA loans, if they're not passionate and knowledgeable about it, make sure that you thank them and move on down the road to somebody that meets that criteria.
What do you got, David?
I mean, it's not about the VA home loan directly, but lean into this group. We have so many different moderators that are all about just really answering all your questions. Make sure you dive deep into, I'm pretty sure like it's every couple of days we're having new members, right? And there's so much valuable information if you missed. I know it feels like probably drinking out of a fire hose with how many posts that happen here, but lean in. There's like the go bag, like that alone like makes it worth it, right? So where you're able to monitor your credit, set up a budget. So the VA home loan, we all know that it's awesome, right? So I can't stress that enough, but what makes it even better is having like this group, Vetted VA, this resource. And yes, I'm biased, right? So, but I'm saying like there is no better group. Like we are here about educating you, and we hold ourselves to a higher standard. We are having to do our own education. So it's not like we're just acting like we know it. We're getting tested and drilled almost. And it's happening a lot. And it is hard to pass some of these tests. And I feel like I consider myself like a guideline geek. Like I used to nerd out on guidelines, like print them, don't make fun of me. And like when I would go on the Stairmaster and I'm just reading guidelines, and some of these tests were pretty hard for me to pass. So just make sure you reach it. And there's no such thing as a stupid question. That's the last bit that I want to lead it off with, because I see that quite a bit where they're like, oh, I don't know if this is, the right place. Like we're all about it. We just want to make sure that you guys are making the best decision for you and your families, because that's our way of giving back.
Absolutely. Speaking of giving back, I appreciate you guys being here into your evening, depending on where you are in the country, even later. Californians here, we're lucky. It's just a little bit after hours. So I appreciate you guys taking the time and answering these questions and hoping to dispel some of the myths. Again, I think we can all say the VA loan is far and away the most flexible loan program there is out there to make homeownership a possibility. And you have access to a great resource to get all your questions answered and get connected with professionals if and when that's appropriate for you. So thanks for watching. Thank you, gentlemen, for joining us. We are going to be off for a few weeks. We have squad rotations here. So we actually had that here recently. So we're going to take a few weeks off. In a month, we will be back with a new group of experts to answer your questions. So in the meantime, you'll just have to type them into the group. But again, thanks, gentlemen. I appreciate you being here tonight.
Thank you, Josh. Thank you, everybody.